All right, awesome, Matt. Well, welcome to Around the Coin. I'm excited to dive in with you. You are the co-founder, CPO at Modern Treasury. Why don't we just start there, kind of explaining what Modern Treasury intends to do in the world and what got you interested in starting the business?
Yeah, for sure. Well, thanks for having me. So, Modern Treasury is a payment operations platform. We work with any company that builds a product or has a service that moves money, which is sort of intentionally a broad definition. We think of ourselves as really providing infrastructure for both new startups and companies ranging from pre IPO to public companies as they build out these products. I think in understanding it, it'd be helpful to go back to where we started and why we're working on this. So, if we rewind about 3.5 years, my co-founders and I were wrapping up at a mortgage company called LendingHome. So we were giving people loans, we were servicing loans, selling them to investors, and underneath all of that is a lot of money movement, hundreds of millions, billions of dollars of just flowing around for all these things. And we had a whole payments engineering team that was building this. We had a direct integration to a few banks, so continually staffed, continually discovering edge cases and complexities and all these things. And we also had called another side of the house, like the financial operations, payment operations, treasury side, which frankly we never really built that much tooling for. They were still dealing in Excel on paper, printing things out, trying to tell customers where their money is, dealing with audits, pieces like that. And we were pretty surprised when we were wrapping up that we had built all this ourselves. We were wondering what did other people do, and so we were lucky. We were in San Francisco, and we basically just walked down the street to companies like Uber and Airbnb and Gusto and AngelList. And we basically learned that all of the same dynamics in house, the same payments engineering team building integrations to their banks, and basically the same woes on the back office. No software really there. And the kernel of the problem was that banks don't really have APIs, or some are developing them now. They don't make it easy to integrate to them. And more importantly, there's no unified standard into the US banking system, or the global one for that matter. And so it meant that if you, depending on where you banked, whether it's Wells Fargo or JP Morgan or Silicon Valley Bank, you name it, you had to go build a custom integration. And that was where the problem started. And all these companies were basically repeating the same thing over and over again. And so we thought, if we start with that and build out this universal API into the US banking system, starting with the banks that these called innovative fintech companies and marketplaces use, we could build something that's pretty valuable, help those payments engineering teams. So that was where we started. And then a lot has come since then, building the software around money movement to help with what we call payment operations now.
Yeah, that's a pretty bold, like you said, it's an ambiguous and bold mission to take on. Surely people have seen this problem before. I'd imagine that there's been at least the people who interact with the banks directly on the startup side see the frustration. Has there been other significant attempts or even other successful attempts, or how do you sort of splice the current market of connecting banks to tech companies?
Yeah, it's definitely an old problem. If you talk to people who are at companies like PayPal in the early 2000s, they were doing the same thing. And what's funny is they were actually integrating in the same way, the same file formats, the same systems. And those haven't really changed for a really long time. And I think where we saw was that the timing was really good to start a company like Modern Treasury, because there was a lot of innovation around, called the credit card stack in the 2010s. Great companies being built that I don't even need to name because we all know them. And towards 2018, when we started Modern Treasury, there was a lot more innovation happening in fintech and people offering new financial products to customers, new opportunities for embedded finance across different things like payroll and stock trading and crypto and things like that. And our bet was that there would be more companies like that, and that the companies that had started in called the 2010s that had gotten big, companies like Airbnb or Coinbase or people like that, they would continue to grow and need great software. And similar to how we now have a cloud computing industry and companies like AWS and GCP that are the default that people use, this money movement infrastructure will also move to something like that over time, where instead of people building this themselves, they'll default to best in class providers, or hopefully Provider, Singular, and we can provide that for all these companies.
So to be more honed in on the problem, it's not like a plaid where the consumer is interfacing with the bank on behalf of a startup or some tech company. It's the back office. So Airbnb, for instance, they receive money, presumably their credit card payments go into one central bank account on Airbnb. Is that how does it work generally behind the scenes whenever you put a credit card in? I imagine they're using like Stripe or something and they're just sending it to some account.
Yeah. So if we talk about Airbnb, they'll have a variety of payment processors, and they'll be accepting payments in different ways around the world, and they'll have a network of different banks that they work with in different countries, and they might have redundancy, using providers that offer the same thing in order to have backups. But yeah, you'll basic in a simple two-sided marketplace, you'll accept payments from one side, either via credit cards or maybe bank rails in other countries, and then you'll pay people out via typically bank rails, although there are some card mechanisms like push to card. Airbnb is a particularly complex business because there's an element of time that people book stays far in advance of when they actually have the stays. And so you end up with a lot of cash on the balance sheet. Other businesses are more transactional. But we can talk about some particular examples of customers that they use us as well, if you'd like. Maybe to be a little bit more concrete, although hopefully over time we'll see businesses like them move from in-house software they built before we existed to providers like us or us over time.
Yeah, yeah. Is there another example that comes to mind? Because it is certainly for people not familiar with how back office finance works, it's helpful
Yeah.
to sort of conceptualize it.
Yeah. Well, since we're on a podcast called Around the Coin, we can talk about BlockFi, which is one of our customers. So we've been working with them for a few years now. And what they are is they're a financial services company for crypto. So if you want to buy Bitcoin or buy other cryptocurrencies, sell them, earn interest on them. If you want to get loans that are backed against your crypto holdings, so instead of having to sell your Bitcoin holdings, you can get a loan from them that's collateralized by your Bitcoin. They offer all these different products to their consumers. An important part for them, similar to other cryptocurrency customers, is getting fiat currency dollars into the company. Because if you want to, let's say, buy Bitcoin on their platform, you need to do a deposit of dollars first, and then you can do that swap. Or similarly, if you want to get a loan, you're getting the loan in dollars, so they need to send money to you. And so for them, they have all these different interactions where they're sending money to users, they're collecting funds from users, and all of those go through their banks. And so they have direct banking relationships that they've established on their own. And where modern Treasury fits in is as that middleware or that layer for them to interact with their banks. So that way, when a user goes to BlockFi and says, I want to deposit $1,000 onto the platform, when they click submit, BlockFi sends an API call to us and says, withdraw $1,000 from this user's bank account. And you're asking about Plaid earlier. They might also use Plaid in that interaction for connecting to, authenticating, and pulling the bank details for that user. Then they use us for the actual money movement, those instructions. And there's a lot that happens downstream. So, it starts when the user says deposit $1,000. The next day, typically, the funds arrive, and then our system sends them a notification, sends them a webhook where they can see that. And there are other workflows within our software, the user interface for things like approving payments, like you might have a daily approval workflow that you go through. There are other things that are internal to the company. This is true across the board, where it's typically called Treasury. Like, how do you make sure you have enough money in your bank account to fund what you're doing that day? Like, if you're sending out $100 million, you need to have $100 million there. And so you need to be able to sometimes move $100 million from one bank account to another. And so there's a lot of stuff like that we also help our customers with. And BlockFi too uses us for those internal treasury operations. So things like that.
And so, like, say take BlockFi as a category, not a specific company.
Yeah.
Like crypto, certainly crypto is a unique category because it's so new and so confusing, to say the least, for banks. But if you take a more established sector like travel or something, will companies generally have many different bank accounts, or do they generally centralize things in one bank account and there's benefits of having one where they can develop a relationship, especially as the companies grow? There are situations where behind the scenes, companies are like moving money between bank accounts for tax reasons or operational benefits or something. I'm curious how, but for me, that's largely a black box, and it's interesting to just think how they operate.
Yeah, for sure. Well, I think crypto companies have a particularly interesting set of attributes that relate to what banks they use, and then we can talk about other companies. For crypto companies, there are some called proprietary bank payment networks. So there's a Signature Bank, which has a network called Signet, and Silvergate has one called Send. And what those let you do is are send funds between accounts at the same bank 24/7, 365, and they're instant fund settlement. And so it means if you have, like let's say one of your users has a bank account at Silvergate and wants to cash out their account really quickly, you can send them a send transfer, which is their payment rail, and they can, get their money right away any day of the week. And so we see the crypto companies oftentimes working with these different banks to offer different products or different services. There could be other reasons too. And this starts to get into why companies in general have different banks. Sometimes you have things where different banks are okay with different parts of your platform. So as you become a bigger company, you might have, we call it like an issuing product, like a card issuance product, or you might have different products like a lending product and a deposit product or something like that. And you might set up different relationships with different banks for that. There are different, sometimes you can do it as a cost minimization or a way to make your payments faster. So if you are doing payments between account holders at Chase and account holders at Bank of America, you might be able to save costs and make those payments faster. So sometimes it's a way to optimize as you scale. But usually in the earlier stages, a company has a single bank partner that they work really closely with. They have that relationship with because they know that they can call their banker in the middle of the night if something goes wrong. They know that they can sometimes provide debt to them, whether it's venture debt or debt for their business, their lending business. So it's a lot more involved than just the pipes. There are elements of relationship that matter quite a bit.
Yeah. That's interesting to think about the crypto piece in particular. I know Signature's experience specifically caters for crypto because people want to deposit and have access to crypto instantaneously.
Yeah.
And that's almost to say it's not that people don't want access to their money faster than the ACH system offers to people. The Monday through Friday, no holidays, no weekends, 9 to 5. It's like that's not great, but it's almost like if there wasn't an urgent need to transact faster, then the system hadn't changed for 30 years, 40 years, whenever it was invented. Are you seeing any, do you have visibility or do you see insight into how the ACH system is changing or evolving? Or where do you stand? Are you bullish or bearish on
Yeah.
banks' ability to evolve and change?
Yeah. So I think we're seeing two things happen. One is people are trying to call it like retrofit the old car and make it work. And then other people are inventing new modes of transportation. So within ACH is like an asynchronous payment type. It doesn't settle instantly. Payments get sent to a central authority who figures out what's going on, and then they settle payments overnight. And there has been some innovation where there's now same day ACH. So if you submit a payment early enough, it can come through by the end of the day. That has led to some speed ups. You see some companies that are taking innovative approaches to risk, where when they're pulling funds from their users, they're actually crediting them on their platform early in order to let them use the money. So this is actually really common with crypto companies, exchanges, where if someone is depositing $10,000 and wants to buy Bitcoin right now, they don't want to wait until the ACH payment clears. And so that's a risk assessment. Do you want to give someone access to that capital? And there are ways to mitigate it on the back end too. For example, you don't let someone withdraw the Bitcoin from your exchange for 60 days or 30 days or something like that. So that helps because when you pull money from someone, it can take a while for the return to happen.
So so I imagine the companies are trying to prevent the instance where somebody submits an ACH transfer and then either they don't have the funding in their account. Maybe they move the funding, so there's lack of funds, or they. I imagine that's probably the biggest one that people, if there's a deliberate attempt at fraud, that's how you could do it. But even then, you could say, "Oh, well, whoops, I made a mistake."
Yeah, exactly. Yeah, it would be bad if you deposited $10,000 Bitcoin and sent the Bitcoin somewhere else.
Yeah,
and then the $10,000 deposit failed. The exchange would be out of luck.
Yeah.
And so that's why they need to hold the Bitcoin on the exchange for longer in this example.
Do you see what's going on, or have you learned enough about the ACH system to know what is actually happening? Why there needs to be these set hours? Is there people involved in some level, or is it just a decision that's bureaucratically made and they could turn. It's like, well, if it's all operating on software, why not? Even it's so important. Why not just staff it
Yeah.
24/7? I still struggle, for this long to understand why it's still set on the hours that it is.
Yeah. So ultimately, it's technology. Like the system was built, and they're trying to make it better, but with things like same day ACH, with things like more cutoffs throughout the day. But there's only so much you can do to a system like this, and
Mm.
so I mean, it's still so much inertia and it'll still be used. But the second element of like, okay, well, what are the new things being built? You see real time payment. There are a few different real time payment rails that are starting to be developed in the U.S. So you see specifically push to card, which was the first one that kind of came about. That's one that the card networks provide, where you can send funds to someone's bank account using their debit card information. So with someone's debit card number, you can push funds to them. So
Mhm.
that goes through the card networks. That was the first one that came out. The second one is the clearinghouse. So they're the body that administers ACH or has come up with the standard. They have a new payment type called real-time payments, which is what it sounds like. They want to help people send funds to any bank 24/7, 365 with instant fund settlement. That actually is live. So that, if you went into your PayPal app or your Venmo app, and if you had a balance, you could go say cash out to my bank and pay it out instantly. And that's using real time payments. So it is something that is called like in production, but not
Mm.
widely adopted yet. Part of the reason is that not all consumer bank accounts can receive a real time payment. This is because different banks need to get onto the standard. And so that's what we're seeing a lot of right now. And that will help adoption quite a bit. But we've connected to the real time payment rail through JP Morgan. So we have a few customers that are live using it for things like paying gig workers faster, paying real estate agents their commissions faster.
Mm.
And so we are really excited about that. And similarly, they have a request for pay that's coming out soon or starting to be rolled out, which is kind of like Venmo again, where Venmo, when you want to get money from someone, you send them a request and say, can you pay me $20? And request for pay is a new payment rail that will work the same way, where you can send a request to someone and say, a utility company can request your utility payment, and then you see it in your bank portal and say accept or reject.
Mm.
And the really great thing about this payment type is that it's a request for a push payment as opposed to a pull payment, which means that all the things about ACH reversibility will basically go away because people aren't. There will still be some mechanism for it, but by and large, you won't challenge payments that you've accepted a request for.
Right.
So
Right.
that'll be really exciting once that's rolled out.
Oh, that's cool. That's actually pretty exciting. I wonder how the changes to the clearinghouse and the ACH system will have an impact on innovation outside, because even in crypto, a lot of people in the US don't see the benefits because we have a fairly robust, reliable banking system. If ACH is instantaneously all available all the time, it's in some ways it takes away the incentives for other payment apps to develop. I mean, there's so many different companies building faster, better payments. But if the ACH system actually was free or nearly free and instantaneous, it's like, well, that's pretty great. Um,
Yeah.
I want to ask you, when you're integrating and building this software, the middleware connecting to the banks, are the banks, like, if I wanted to start a bank, is there a couple of software vendors I would use to create the accounting software systems? And
Mhm.
are those the companies you're actually connecting to? I can't imagine each bank has their own, custom built software. There must be some standardization. How do you actually make the connection, the API connection to the bank itself on the
Yeah.
back?
Yeah, your intuition is right. There are a few core companies, FIS, Fiserv, Jack Henry, and there are a few others, but most banks do buy this software, and that is by and large what we're connecting to. But with the asterisks that people customize things, people are in different years, versions of it, they interpret things differently. So not every bank actually functions the same way, even if they supposedly are buying the same software. And oftentimes banks patchwork together different vendors too. So they might have something for wire, something for ACH, something for Swift wires. Some banks do build their own software. So you see a lot of the larger banks, they actually do have engineering teams that build those direct connections to the Fed, and they build out their own ledgering system, their own compliance systems, pieces like that. It obviously requires to be basically you have to be a pretty big bank to do that.
Yeah.
But in those cases, we are integrating against totally proprietary systems or systems like Silvergate's and Signatures, Signet. Like those are also different, although usually they are still buying vendors for those.
Yeah. And what languages are those built on? What are there standard like banking layer technology
Mhm.
tools?
Yeah. So we all talk about APIs a lot. I think that APIs are obviously mainstream, and that that's how people integrate to us. But typically, we're integrating against what's called SFTP, Secure File Transfer Protocol. And what that means is we're not using an API. Instead, we're creating a file, kind of like a text file or a CSV. Sometimes they're fixed with files, which means like the first 10 characters are the name and the next two are the amount and so
Mhm.
forth. And we take files like that and we basically put them in a Dropbox folder that the bank gives us. It's all programmatic, but we drop files in their Dropbox folder and they pick them up and read them. And then they say, okay, let's go tell the Fed to send a bunch of money. And then then the bank, when the next day happens and you have updated bank balances and updated bank transactions, they take a file and they put it in the Dropbox folder, and then we can go and pick it up and read it. And so I'm simplifying. It's not Dropbox. It's this old technology they've had
Mhm.
for quite a while, but that's what we're integrating against. Some banks do have APIs that they're building out now, and so I think for a lot of bankers, their API strategy is quite important. And we're helping those banks to get onto the modern treasury platform, so that way, basically, their customers can leverage the benefits of APIs, like more real-time data, more real-time payments, while still using modern treasury and the suite of called payment operations software tools around it.
Mm. Wow, that's pretty manual. More so than I would have imagined. The fact that it's dropping a file inside of a bucket.
Well, so this is all automated, right? So
Yeah.
these are all no person at Modern Treasury is actually dropping a file in there.
Right.
These are all software tools, but yeah, it's surprising. This is how most money moves in the world is via stuff like this.
Yeah. Yeah. I imagine there's some banks that probably do it manually today. Um,
Well, there have been a lot of banks do have human workflows on the back for things like if you're sending a lot of wires, then you might have some banker that gets a flag and they need to go look at the things that are coming through these files, and that can cause human error as well, which is both unfortunate and surprising.
yeah. Yeah. Interesting. And do you think that modern treasury will likely, say, in the next, I don't know, 6 years, go in other countries? Or is the U.S. Different enough where if you just win the U.S. and just do this, like you can live a good life and
Yeah.
you not have to think about it? Or do you think part
Yeah.
of the mission really is to connect banks across the world? Is distinctly your
Yeah.
focus?
So I think if we work backwards from our ambition, we want to be working with the best companies, the biggest ones that are building these innovative financial products, and to do that, we need to support them globally. Like these companies are going to expand to other places, and to that end, a lot of our customers have already.
Yeah.
So we're already in Canada, we're in the EU, we're in the UK and Australia, and helping these companies with local bank-based payment regimes, BACS, SEPA,
Hmm.
EFT, things like that. um, we're not call it like doing the whole go to market motion in those countries right now. We're not people selling to call it a business started in the UK. But as our customers are going there, we are supporting them, and that's important to us to both support our customers and be able to get our feet wet in those new markets.
Yeah.
So yeah, we're already there. We're really happy to be there.
Yeah, it's a good point because you're when you're working with the companies like Airbnb, they ideally would love just one answer, to handle. I have to imagine it's got to be so complicated behind the scenes with their payment team to handle payments from different countries and understanding what the implications of different payments are and the risks of, getting insufficient funds or, things things you certainly don't want to see
Yeah.
on the company side. Um, yeah, yeah, that's got to be a big headache behind the scenes.
Yeah.
Um,
And it's great if you're a company building against our API, because to switch to a different payment rail in another country, you change two or three fields and you're good to go, versus having to get people on the ground to meet a bank in that country, understand how the payment system works. Like we abstract all that away. So it's just really easy to, at least money movement wise, to go to that new country.
Yeah, yeah. Is crypto any impact to the business? I mean, from the way you describe it, it doesn't appear to be impactful. You can work with crypto companies for sure and help them
Mhm.
integrate with banks. But do you see anything other than what we discussed that could, benefit or impact or Any
Yeah,
play?
yeah, yeah. Like you said, we obviously work with crypto companies and help them with those fiat payments. I think over time, we've already been asked this. We don't do it now, but we've been asked to support crypto as a payment rail. So thinking about a lot of companies want to accept Bitcoin or different
Mm,
cryptocurrencies. They want to pay out. They might want it as a treasury asset. So companies like Square and Tesla are holding crypto on their balance sheet. So I
mm.
think there are things like that that again we want to make sure that our customers want that and will use it, and that it will have good appeal. But if that's what our customers are looking for, we're not opposed to building, or we do hope to build stuff like that over time.
Yeah, yeah, that'd be exciting. I think that you're the kind of company that could really expand further the access that companies have to crypto.
Mhm.
And just a lot of it. I was talking to founder of Lolly, which is a Chrome extension that allows people to get rewards, like a
Yeah,
gifting rewards when they pay with when they would use Lolly, they get Bitcoin back. And he brought up a good point, which is like people often feel hesitant about crypto because they don't understand it. So there's a cultural shift that is like, I now own Bitcoin. I have it in my wallet, even if it's $15.
yeah,
Just conceptually, I have a Bitcoin wallet. I know how to send it to you. There's a lot of value being delivered, not just in the $15 sent to your wallet, but in people understanding it, supporting it, seeing the benefit of it. So when you guys open up the payment option for people to send crypto, it's like, oh, every time I go to a checkout on Airbnb, if I see that option, it just supports the whole movement of crypto for people to appreciate that this is a recognized currency. And now in El Salvador it's a mandatory recognized currency, so people have to offer Bitcoin as a payment method.
yeah.
um, yeah, yeah, so
Yeah, I think you're right. Yeah, it can be scary for consumers and also for businesses. I
yeah,
mean, sending a wire transfer is scary. If you send a wire, it goes out, and
yeah,
you can't really. It's pretty hard to pull back. The same thing, send Bitcoin. That's pretty scary because if you fat finger the address you're sending it to, it's gone. And
yeah,
so I think there are similar principles to how we think about well, what does payment operations look like for traditional money movement? Like, how do you build good controls and workflows around that, and how do you apply that to not only US based payments, foreign payments, and crypto eventually, because you probably want an approval workflow like before you send a Bitcoin payment and stuff like that.
yeah. I want to ask about YC. How was the process of uh, deciding you wanted to do it, signing up, getting in, and you went through the program a few years ago. I'm curious
Yeah.
your takeaways now.
Yeah, my co-founders and I, we loved YC. We applied to YC when we were wrapping up at LendingHome,
Mm,
and even the application itself was a great forcing function to just write down how we thought about the business. The questions it asks are great. So if you're not thinking about applying to YC, just writing out the answers to the application is great. But for us, being three first-time founders, it was really helpful to basically have partners who have seen this quite a bit, can ask you the right questions, keep you on track. Um, the YC brand helped quite a bit because we early on had to build bank relationships to get off the ground, and three people working out of someone's apartment, it's usually pretty hard to do that. But having that brand behind us really helped us to get in the door. And helped us to track top tier investors and all that stuff at the end of YC. So we had a great time. It was certainly smaller when we did it. It was about 140 companies.
hmm
But even at the current size, I know that's something people talk about. I think it's still great because, I mean, they've scaled the program, and part of the reason it's bigger is just they're accepting people in other countries as well. So I definitely still encourage people to do YC like we did.
How many people? How many companies are they letting in now? Like there, you mentioned 148. That was not per batch, is it?
That was in our batch. I might butcher it a little bit, but it was about 140, 150. I'm afraid that I would butcher how many were in the last batch too. I think it was about 400, but I might be off by some, like 50 or something like that.
That's so many companies.
Yeah,
That's wild.
yeah. But I think it's great because these companies, like I said, a lot of them are around the world. They're not just in the U.S. anymore,
Yeah.
and these are all new ideas. Like this is innovation happening, and YC supporting that. So that I think that in general is a really good thing.
Yeah, yeah. I imagine they're probably sitting there thinking, "Hey, we have a lot of cash, from some of the sales and liquidation events. We realize that innovation is going to happen across the world. It's almost like you could take the Harvard and Stanford route where you say we're going to remain capped at a relatively small, consistent headcount, which maintains the exclusivity of it. But then on the same token, you have, how much money does Harvard and Stanford have just sitting in endowments that's not being used for anything, other than just their own return on investment. So yeah, I give YC a lot of credit. I think it is for the benefit of everyone else on the planet to have access to that, as opposed to
Yeah.
keeping it really small and really exclusive.
Yeah, definitely.
Yeah. So getting the first couple of customers, even the first customer, for you
Yeah.
guys in particular, this must have been, I'd imagine, like pushing a rock straight uphill. Like
Yeah.
yeah. What was that like?
Yeah. So our first customer, you're totally right. Because we're saying, hey, move probably the most fundamental part of your
Yeah.
business, the money movement, to this brand new startup.
Yeah.
We're probably the most important software you buy, like maybe before or after AWS. And so the first customer was a friend of one of my co-founders, and he started a company called Sana Benefits, and they're still a really happy customer, grown a lot on us, and they're a health insurer. So they have very complex money movement. Administering these healthcare plans. So they were actually a really great early customer, pushed our platform quite a bit. Our second customer read the YC roundup of companies and reached out to us actually. So that was really cool. That was a home flipping business. And then our third customer was a Side Brokerage, which is a real estate brokerage. So, pretty good early diversity, I guess, insurance and real estate. But yeah, those early customers did put a lot of trust in us, and that really helped us to get to, I think that helped us get where we are now.
Yeah.
And over time we've proven that out. So having more successful, happy customers. But I think when you're building infrastructure, it's more important that you just make people really happy and make sure it works really early on, rather than being really focused on certain metrics that you need to hit. Like we just needed to prove that the technology worked and made people happy.
And you must have integrated, you must have done the front end work or the back end work of doing the integrations with the banks first. And so did you have those? I mean, how did banks just will say, okay, go ahead, you can integrate with us? Or did you say, let's just start from scratch once you had the customer on board and go directly to their bank?
Yeah. So this is a fun part of our story, which is that we had a feeling early on that Silicon Valley Bank would be the first bank for us that was important. So we focused on working with them. And what we did is we opened up our own bank account there and integrated against our own. With typically when you build one of these integrations, it's to do what our customers do, to move a lot of money. And we were telling them that we're doing this just so that we can end up selling our software to other companies, which I think was a new concept at the time. But it's a model that we've repeated with other banks over time, where we've a lot of the early banks that we supported, we would actually go start a banking relationship with them and build the integration there, which doesn't necessarily scale super well, but got us pretty far. And that's one of those YC mantras, is do things that don't scale. So
yeah,
I think it helped us a lot.
Yeah, totally. So you just open up a bank account, I imagine, everywhere that you want to integrate with, and then you develop the relationship with the bank, I imagine, which is decently important because these things are not like open APIs. And then you're from that point, you open up the account, you talk to them. Is there people in the bank that you're trying to get in touch with? I ask this because I find the business so interesting because it's not simple. It's like complicated how you've done this behind the scenes. It's really impressive.
Yeah, no, it's pretty involved. It wasn't that easy, but they're navigating banks. I mean, they're big companies, so you need to figure out the right people to talk to. They have different groups, like product groups. They have sales groups, and so it depends a bit on the bank, the right group to talk to. Ultimately, you need to get their documentation, so that's usually an implementation group. But it's not really one size fits all. And one thing worth noting too is that we're not still opening up our own bank accounts everywhere. Now that we have more credibility, we've been doing this longer. If we have a new bank that we're, let's say, implementing for a customer, we'll typically integrate on their behalf with that bank and build that integration for that customer at first, and then it's generally useful on our platform afterwards. So that's typically how we do it now. Right now we have about 15 or 16 banks on the platform.
Oh, 15. I would have guessed many more. Not to downplay with the work you've done, but I just think that there's so many banks out there, right? Even in the US, there's.
Yeah, well, there are a lot of banks, and we definitely want more, but it's not hundreds.
Yeah.
It's called like 50 or something like that in the U.S. Because when you look at for the type of customer that we're working with today, someone who's building out a product or service that moves money, there aren't that many banks that
Mhm.
service those corporates and do that type of transactional volume, and so it's enabled us to be pretty focused on those banks. Now over time, yeah, we'll add more banks. We'll go to other countries. Other countries though don't have as many, nearly as many banks as we do. We're
Mm.
pretty unique in that regard.
Mm.
Yeah, Canada I think has 6 banks for reference. So it's different in other places.
Yeah, yeah, that makes sense. There's probably a big long tail. Like if you're Airbnb, to go back to them, you're probably choosing really amongst what, six, seven. I mean, you're not going to work with a second tier bank or somebody that's not reputable.
Yeah, and I think one thing for us too is people really want our software a lot of the time, so they'll switch banks in order to work with us,
Hmm.
which is we're obviously very happy about. So it helps us avoid some of that long tail right now.
Yeah, yeah. And you guys raised a bunch of money. 40. How much did you guys raise? 50?
Uh, 48 million, yeah.
48. Yeah. And is that, I imagine, hiring people, building more integrations, anything that's not, I don't want to use the word obvious, but straightforward in terms of
Yeah.
new products or things that you're thinking about building? Or um, do you feel like
Yeah.
the roadmap is pretty straightforward when it comes to the business?
Yeah, we're in an execution business.
Yeah.
We know what we have to build, and so we just need to execute against that. And so we're actually a really small team. We're only 40 people right now. So when
Mm.
we raised our Series B, we were like 15 people. And so for us, yeah, that money can go towards hiring, towards being able to take bets that we want to take. Also, part of it is about having a balance sheet to build trust, so that we can go to the companies that we want to work with and say, hey, we're going to be around. We have a very big balance sheet. We have backing of top investors. And having great customers is first and foremost the most important thing, but then it doesn't hurt afterwards. And I think it's just recognition of the business that we're building, and how we value that business every time we raise money.
Yeah, yeah, it really does help. One of my last startups was in healthcare, and healthcare
Mm-hmm.
is similar to banking in that way, where there's a lot of upfront investment by some of the institutions, whether they're banks or hospitals. And being
Yeah.
a startup is, I ask you so much about the early days and how you crack that egg, because it's like it really is pretty daunting when you're trying to operate between two large organizations, especially when you're doing something as fundamental as handling the payments. And I found that same resistance where it's like you solve the problem if you're big and have a good reputation and have money. But if you don't have size, which is the number of customers you're working with, and a good reputation and money, money's kind of in a way I wouldn't say hack, but it's a way you can quickly get to a reputational state that people respect. And that we raised 23 million, and once we raised it really helped us open the door to conversations. I often find it's a good door opener, but it isn't. That's about as far as it goes. um, I mean,
I
how
think,
bad
yeah,
is
you have to be honest with yourself. Like, are you are you are you going to be able to deliver on the money that you raise,
yeah.
what type of business are you building? But if you are building a really large, potentially 20 billion, $100 billion company in the grand scheme of things, I don't think that it will hurt you if you can execute against that.
Yeah, yeah, agreed. I wanted to ask you about, do you feel like the government plays a, I don't want to use the word like like simply positive or negative, but do you feel like we're calibrated properly behind the scenes with banking? I'll caveat that by saying I think after the Patriot Act in 2001, we're only a couple weeks after September 11th, and that the Bank Secrecy Act and a lot of the rules that came out after 9/11 put a strong clamp on KYC and anti-money laundering rules, but also a lot of the ways that banks could operate. I think I have unclear and mixed views about it, but I'm curious if you've seen that be a hindrance to innovation, or if it's still relevant in terms of preventing terrorism or bad actors. I wonder if we removed 95% of those rules, would that impact terrorism or drug smuggling. I mean, those seem to be buying and selling weapons, child prostitution. You know, that's avoiding taxes. Those are in my mind. Those are the three. Those come to mind. There's probably other offenses that people can do, but that the government's primarily interested in a few really serious malicious events. Anyways, what do you, do you feel like we're
Yeah,
calibrated relatively properly?
yeah, I'm not an expert on government
Yeah,
regulations, and that's not something honestly I put that much thought towards. We
yeah,
operate in the environment we do. I
that's fair.
Yeah, I think in general, especially if you're a high profile business, people are going to try to defraud you, and so you want a really strong system for KYC, for AML in place. You know your customer, know your business, anti money laundering, all that stuff. And so, whether regulations make that happen, I'm not sure, but people definitely build that out. And, there are other places like we were talking about the real time payment rails. We actually didn't talk about. There's a third one called FedNow that people might have
Oh
seen
yeah,
that the government is pushing. The Federal Reserve is building that, and that's going to be another one. And so that's more innovation that is coming out of the government, probably just creating more competition, and I think that's a good thing. You
yeah.
have the clearinghouse building out RTP, you have the government building out FedNow. That's okay if there are multiple real time payment rails. That's better for the consumer.
Can you elaborate on that a little bit and how they're positioned? I guess who the organization is, like the Federal Reserve versus the clearinghouse
Yeah,
that manages the ACH, and how if there's dynamics between those, and how.
yeah.
Yeah, I'm curious to learn more about that.
Yeah, so the clearinghouse is not a governmental entity, and so they're building out their real time rail. Actually, I mentioned earlier some banks aren't on it, or a lot aren't, and part of the reason is that smaller banks are, and some larger ones actually, are waiting for the federal scheme to come out. They
Mm,
prefer to be more tightly coupled to it, and
mm,
so that's FedNow, which I believe is a target release date of 2024. So don't hold your breath for too long.
wow.
But yeah, but it will come around, and that will go by before we know it. And I think the cost structure might be different. It'll probably create competition, honestly, on costs. So as the development cost gets amortized over time, you'll see the cost of those payment rails go down. Wires are more expensive than ACH. This will be somewhere in between, and hopefully will trend towards ACH over time, or hopefully trend towards zero over time.
Mm,
Um, and Yeah, so FedNow, I think it's too early to know exactly how it will come in, but I do think it might have more broad appeal with smaller banks, community banks, which will help adoption for these real time rails. And I don't know what second order effects might come from that. Probably new types of companies can be built. It might impact the credit card rails if things can happen in real time over bank rails. I'm sure things like payday lending will not have a fun time, but that's a good thing.
mm.
So a lot of stuff is happening.
Yeah.
It'll be fun.
Is that so? The Federal Reserve, they're I think of them as being primarily responsible for currency volume control. How much money to print, and they think a lot about that. But are they also building this technology? So they're hiring. I mean, internally, are they saying, "Hey, we want the economy to grow. Therefore, we're going to invest money into building this technology that integrates with banks," and then they hire people. Yeah, I mean, is that generally how it's structured behind behind the scenes, just like any other
Yeah,
startup, effectively, but just access to different resources and funding?
yeah. They're building out these systems. So like Wires is run
Yeah.
over. Well, there are a few systems, but FedWire is the really big one. And so that's a Federal Reserve system. So yeah, they are sitting in between banks as that central authority to regulate transfers between banks and overnight. In the example of ACH, all the banks send them a bunch of payments, and they say, okay, well, it nets out to $100 million to JP Morgan and 20 to Bank of America, or whatever the sums are. And so they sit in the middle and regulate those transfers, as opposed to something that's just more real time, which is what we're moving towards. But they'll
Mhm.
still sit in the middle and regulate that.
Do you think there's any, say, in the next 10 years, any movement expected on the government to use blockchain? I mean, they could very well build a very similar system, but without the heavy centralized computation and effort. And it seems like it would have many of the same benefits. I mean, being centralized in the case of, say, the FedWire and the FedNow, it's not like they have that power for any particular reason. They're not trying to reject people per se. Could you see that happening, or is that just light years away?
I kind of I don't think that that would be likely to happen, at least
Yeah.
not in the next 10 years. I think building out FedNow is pretty good if
Yeah.
they can get there. I think it's possible that you might see things where maybe they're like decentralized in between banks, but even things like that might end up boiling down to real payment rails at the end of the day. So you might have like a ledger that's decentralized that ends up actually moving money via FedNow, via RTP, or things like that.
Yeah.
Um, but banks, I think banks will typically continue to use these, call it the Federal Reserve banking system, the clearinghouse, entities like that.
Yeah. 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 It's interesting to think because those would only work domestically. Is that right? So wires, for
Yeah,
instance, I mean, you'd have to use
yeah,
a Swift network to send money internationally.
yeah. So you'd end up using Swift for international payments, and then you end up getting into this web of intermediaries, like who's messaging who in order. You think you're sending money just to the destination, but it's actually flowing through a bunch of different intermediary banks on the way there. Um, and so I think that could be a better use case for something like crypto. But even there, we're seeing innovation where instead of having a lot of intermediaries, a lot of these cross-border payments companies are setting up banking relationships in multiple countries. So when you're sending money from the U.S. to Great Britain, money's never actually crossing borders.
Right.
You're just giving money to the U.S. account of this cross-border payments company, and then they have an equivalent amount in pounds sitting in the UK already, and they disperse from there. And I think that, in my opinion, that's actually pretty efficient, assuming that those companies have enough liquidity for the payments.
Yeah. This would be like the TransferWise type companies.
Yeah, exactly.
Yeah. Yeah. That is pretty smart. I mean, you don't have to actually, the benefit of money is that it's equal, whether you
Yeah,
hold the dollar, I hold the dollar, it's the same thing. So to actually move information or move money across does seem kind of silly. Yeah. Yeah. Way more efficient.
yeah, exactly.
Um, cool, man. Well, thanks for diving into the details. Talking about the technology, how you got started super early, what you guys are planning to do in the future, how the banking system works. I really enjoyed hearing from you. You lead to put a wall around where your ownership of the company is with respect to your co-founders. You have two co-founders. Do you think all things technology and banking, or how do you guys balance the responsibilities?
Yeah, so I lead product for us, so figuring out our roadmap, what we're building towards, overall product strategy. So my title is CPO. One of my co-founders, Sam, is our CTO, and so he's in charge of our engineering team, actually building out these bank integrations. So he's figured out how to build all the stuff we're talking about,
Hmm.
and managing the team. And then Dimitri is our CEO, and he's running the company, investor stuff, a
Yeah.
lot of sales. Well, we all do sales, but the other parts, G&A, marketing, things like that.
Yeah. So the CTO and CPO roles would differ in that you think much more about the banking side of the world, and he'll say, okay, Matt, this is what you want to do with this bank. This is specifically how we're going to implement it on a tactical, technical level.
Um, in some, I'm setting the roadmap, or the team and I, the product team and I, are setting the roadmap for what banks are we going to build when, what new
Mhm.
payment rails, what new countries, and things like that. But I would say in general, like our overall strategy around banks, like why we're building the way we do, that's very collaborative, not just with me and our CTO, but all three of us as co-founders. And I think that's where, since we've worked together, known each other for a long time, we're just really on the same page about that.
Yeah.
So yeah, it's not. I mean, and honestly, Sam, he understands banks and the way their technology works much better than I do.
Yeah.
So definitely, I mean, he's great at this stuff.
Yeah. Yeah. I find it somewhat blends together when you work together with people over long time periods. So, but yeah, sounds like a cool team, cool product, man. Congrats on all the progress. I wish you guys nothing but the best. And yeah, are you active on any social tools?
Yeah, I'm on Twitter, Matt G Marcys. I guess more importantly, if, for anyone listening to this, we're hiring a lot. We're hiring a lot across the board, but especially in engineering. Like I
Mm.
said earlier, we have so much we can build, and so anyone who is interested, You can apply. Actually, if you listen to this, send me an email. You can probably guess what my email is, and I'll make sure to flag it.
Cool. Awesome, man. Well, onward and upward.
Yeah,
Keep
definitely.
chatting, man.
Thanks for having me.